Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks with another video, and this time today's video will correspond to other factors in the market which is influencing the market, the bond yields, Bitcoin, US oil, etc. We'll discuss about that and a little bit about the markets which is falling, and this was on expected lines. So let's get started. So first of all, a disclaimer that this is not a stock recommendation. People taking any position or any share that I talk about should that with their own due diligence and research. And I'm not in favor or against any company that I talk about. I'm not a member of the NSE and BSE, and that I'm not an official portfolio advisor. And whatever I discuss with you with respect to the markets or any other asset class is purely on the basis of my experience into the market over the last 13-14 years. So let's get going. Before I talk about the markets, a small request: can you support me on Patreon? Once you do that, help grow the channel. Help you also ask me questions, seek out answers in greater detail. Once you get a $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time. And also, if you pay $100 upfront, you get 1 year access to have that. And you'll have discussions on markets, on economy, on different levels in the markets, and whatever queries you'll be having, I'll be more than happy to answer that. Now let's get going, and before talking about anything else, we have to talk about the market. So in fact, Nifty has broken the 50 DMA yesterday. We were talking about it, 21,850, 880, and small cap, mid cap index is falling in tandem as well, and everything is going downhill at the moment. So if I look at the Nifty, 21,710 was the low today. There's a small recovery, and the recovery is because of the fact that over a 1 month period, if you look at Nifty, then it is getting oversold, and that's why some sort of a recovery is taking place. But I see today or by tomorrow Nifty going towards levels of 21,600, 21,550, and that's where, when I discussed, your first 20% of your five tranches should be into the market. So 20%, that's what I'll be doing. The first 20% may just get invested at around 21,600 or so, and over the course of the next few days, couple of weeks, we could see levels closer to 20,000. And although experts are not talking about this, but once 21,500 gets taken out, then we are in for a tizzy ride on the index. 21,860 is your 50 DMA. If 21,860 is taken out on the upside, then things change, but it doesn't look like. And we are looking at a situation where 21,000, if you look at it this level, 21,100 or around 21,200 is where immediately the market is headed. This was the low in January that we hit, and then the market started to move up. So I think 21,200, 21,100 is a given, but even after that, once that is taken out, then we could have a sharp, you can say, downtick towards the levels where everything began, or the up move began after the elections or the state elections, and that was around 20,200, 300. So I will not be surprised if we reach these levels of 20,100, 20,200 over the course of the next 2 weeks or so. Not over the course of the next 2-3 months, but over the next 2 to 3 weeks, we should be around here, and then the move will begin. The charts are broken. Similarly, on the mid and small cap, we are seeing the same thing. So small cap tried to recover a bit. If you look at it here, it tried to recover a bit on the 13th and went up, and now it's again a downhill journey for this for the index, and it's already down some how much, 800 points or so. Sorry, it's already down some 5,800 points from the highs, which is around, if I calculate, from the highs of 46,800, is around 12-13%. So the small cap index is down 12-13%, which is not huge. I expect that small caps could be down around 25 to 30% by the time this all ends. So here here again we are looking at a scenario where 35,000, these levels in October that was reached, I think we are going to go there. So if you look at here, this is a complete, you can say, topping out pattern that we are seeing, rounding top kind of a pattern we are seeing. And once this 40,200 is taken out, today's low was 41,000, but once this level of around 40,800 is taken out, this rounding bottom will be confirmed. And in fact, on the 14th of March, we did go to 40,000. And so, in fact, we did go below that. We had a recovery. So, below 40,200, this is headed much lower. So, a bigger correction is on the infill. As we move ahead, keep on, if you have funds, keep on putting in your money, 5-10%, 5-10% on every 200 point nifty fall. That's what I'll say. If you don't have money on any rallies, probably get out of positions in which you think that the positions are leveraged and the stocks are not that great. Otherwise, you could be in deep trouble by the time all this ends. Even if you look at the mid cap index, now the 50 DMA here is 47,450 or so. We are at 45,700. We went to 45,400 and then a strong recovery from there. I feel there could be a recovery. It's not ruled out that there could be a recovery for a couple of days, but eventually, again, if you see here, rounding top could be seen. 43,800 is the low here on this. And if I see here, so this is, if you see this, this is the fact, this is the move I'm talking about. And here the low was 45,200. So if 45,200 is taken out and the market closes, or the mid cap index closes below 45,200, another rounding top could be confirmed. And again, we could be headed towards October lows of around 38,000 on the index, 38,500 or 38,000 exactly. So again, major declines possible on the market, on different stocks. So be extremely careful. Now, I just wanted to talk to you about Bitcoin. This is a leading factor. I've always told about it, that this is a leading indicator, especially on the downside. On the upside, it could be a situation that your markets might have run up so much that the move in Bitcoin might not be that great, and you would say that, okay, it's not showing any significant correlation with the market run up. But when it starts to fall, then you are virtually certain that there is a risk of trade going on. Reasons could be anything. Reasons could be oil. Reasons could be the fact that the Fed might end up saying that we are going to cut the rates maybe at the end of the year, and not even in the next meeting or the meeting after that. So it could be anything. But what the charts were saying, say a week back, 4 days back, is what is happening. So Bitcoin has broken the 20 DMA, 65,000, is headed much lower. And even here, if you see on a, if you see the 1 year chart, there had been a sharp surge above 49,000, 50,000. From there on in, the Bitcoin started to surge in February. If you see here, in late February, and it made a top in March. On March 13th, it made a top, and quickly it went past 70,000 or so, went to 73,000 or 73,800, and now is showing a retracement. So we have a situation that currently it's at 61,373. Now the only support that is left is 58,800 on the Bitcoin. Once that goes, probably in the next few days, we are going to see, I think, a total reversal of the move that had already taken place on Bitcoin. So we could see 50,000 very quickly, and eventually this might just probably at least go towards 40,000 or so, and around 41,000 this might just settle down. So another 30% decline on the Bitcoin is possible over the next 1 month, maybe less than that, because that's how Bitcoin moves, and or cryptos move. So that's what I'm looking at the moment. Plus, if you look at Another factor that people are talking about is the oil at $87.18. It's showing a complete reversal, it's showing a rounding bottom kind of a situation. If you see from here, from these levels of August, when it made a top here of around $86, $88, I think around 88 dollars per barrel, it was the high. We are headed there. 87.25 is the high today, and if I closely see, then the high made is 87.66. Once 88.50 is taken out, we could be headed easily towards $95 per barrel. So be extremely careful in here. uh, if you see here, 94 $95. So at that point of time, Indian markets will sulk. At that point of time, stocks will go even further down, and markets normally discount 3 6 months before. So this is what the market thinks basically, is that the oil is going out of hand, due to which current account deficit will increase, due to which government will not have the funds to spend so much. And so market is trying to price in as to how much the damage would be, suppose if the oil goes to 95 to $100. Plus you have other factors like the US yields going to 4.3 or so, and going higher, and the fact that the rate cut might not happen immediately. So all this coming together with the markets trading at 23 and a half times at its high. So I've always maintained that you should always follow uh, what the current PE of the market is. 23.6, 23.7 was at the highs that the market was trading at. It was not cheap at all. It was on the expensive side. It was not ultra expensive, but it was on the expensive side. Normally the market's average is around 18, 19 times. And so we were trading at 23, 24 times. Maximum we go to 28, 29 times. So I think the market may just come back to 20 times, around 20 times. So if I take 952, 20, 21 times, at 21 times, we are talking of 20,000. That's why people are talking of around 20,000 levels at least in this decline for the market. So this was a video on the market and what external factors could be affecting it. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.